Good morning, ladies and gentlemen. This is Clueless 8, and this is a early morning in New York, Monday, August 24th, 2015. Well, I guess we can call it the modern day Black Monday. I'm not making any light of what's going on. The global market sell-off continues. Um, we have talked about it for many months, but the speed and the violence to the downside, which normally would have taken months, is now happening within days, if not hours. That's something I talk about frequently about the involvement of algorithmic high frequency trading programs, which cause massive disruptions both on the upside and the downside. In this case, on the downside, as we can clearly see, and things are taken to the woodshed, and the carnage and the technical levels that are breached and retested on the downside happen within hours, a day or two, instead of months, instead of weeks and months. It's an old saying in the business. There are decades when nothing happens, and then there are months or days when decades happen. Well, that's exactly what we're seeing here. All right. So the bottom line is that if you go back and review, and many of the advanced coaching session members should certainly review that, and to think about the things that we talked about. We talked about the October 14th lows, which was the last major crisis in the U.S. markets. That was mid-October 2014, with the high yield bond fallout, the Ebola crisis, you name it. And This is pretty much the same thing, except amplified by a factor of maybe 10, factor of maybe 5. China started the route with the devaluation, and then it just unraveled. Now, one of the key things for every single trader and investor to keep in mind is that the reason why the violence is happening so quickly on the downside, we're losing 500 points, 1,000 points in a matter of days, is because the amount of leverage in the system, that's the amount of money that's borrowed to trade in the markets. These are institutional margin calls that are being completely demolished. In other words, there are a massive institutional forced sellout, a word term that you've heard from me for many weeks, many months, that when these things happen, they unravel. Okay, it's a geometric progression, not an arithmetic progression. Simple English, it doesn't happen in 1 plus 1 equals 2. It just exponentially moves forward. That thing happened when the markets move up, like they did from October 14th, and I'll talk about that in a second. And the markets basically shot up after correcting here. You can see that. And this is a long-term chart, by the way, of the U.S. stock markets, Dow Jones Industrial Average, going back to the lows of 6,400 back in 2009 to where we are right now, or where we were on Friday. We're obviously lower than that right now. So one of the things that so what happens is when things unravel like that, you got a lot of global macro hedge funds full of oil, commodities, which started this route and this massive pullback, and one after another they start blowing up their portfolios because they don't, they're borrowed on margin, leverage is cheap, global interest rates are low, so they're out there, just doing what they need to do. Well, guess what? The blowback time is now. So just thank the stars that you're not a global macro commodity hedge fund, which basically just went out of business. Now, you don't hear about these things, in the media, they don't talk about it, but the reality is that's exactly what's going on. And of course, that then there's the psychological factor, retail selling, mutual fund guys panicking a bit. Hedge funds are basically, a lot of them which are leveraged too, are getting hurt. So it's just a multiplier effect to the downside. Now, not making light of it. I'm just giving you the actual reasons behind it. Now I can go on and on about that. I did put out the webinar on the advanced coaching session for everyone to view. So there's a lot of detail that's talked about there, and I talked about specifically if the market falls another 5, 6, 700 points, that don't sit there thinking, oh my God, this is unbelievable. It's happening. Technical levels are there. Now let's take a quick look at this. You have, let me get the drawing tool. You have you have this low, right? You have this low, which is a little bit below, which is around, 16,000, slightly below 16,000. And that was not too long ago. But, traders and humans have very short memories. They remember this stuff, right? Which was right here, slightly below 16,000, and that was only on the mid-October 2014. From that, we made a humongous move for the next couple of weeks, going actually back into December, and that was almost 2,000 points. So what's really happening, if you want to look at it purely from a pattern symmetry standpoint, that we went up to 1,000 points and then we moved in a trading band, which I kept on showing, in a trading band between 17,000 and 18,000. Okay, right there. You can see that now. So if you look at pattern symmetry, then this is what's going on right now. So we're basically going to go, give or take, somewhere around the mid 15,000s. We're probably going to have slippage here. All right, because these type of red candles are not like, it's going to just reverse itself tomorrow. Yeah, you can play in between intraday, make 2 points, 3 points. I did that. We did that on Friday. But I'm talking about some macro forecasting here, all right? Where you wanna, buy or sell things, and where the high probability buy points are. Remember, investing and trading is a game of probabilities, not a game of certainty. You heard me say that a zillion times, all right? So the bottom line is that if this pattern symmetry gets and of course, there's going to be slippage, and this slippage is this mark right here. You could be looking at, you know, probably 15,300. Now, these are just estimates. When panic takes over, just the way it is right now, technical levels are just meaningless. Throw it out the window. But still, you can see the pattern that's developing. That's my job to do, to show people what's going on the outside, and so that you're not completely blind and think, oh my God, this is it. This is, we're going to fall, we're just going to disappear off the face of the earth, and stocks are just going to go to zero. That's not the case. We are basically in a panic stage here. The markets are. No, I'm certainly not. And we're looking for opportunity. So tactical traders, investors will make a lot of money over the past next couple of weeks. Talked about that extensively in my trading advanced coaching session on Saturday morning. And the rest of them are just going to basically I don't know what they're going to do. I mean, let's put it this way: 99% of investors and traders, to be honest with you, never made money on these big moves up. All right. So the few that and so now that it's pulling back, hopefully they get a chance to make some money. You know, and the dogmatic bears and shorts who basically suffered through this whole upturn, okay, are actually starting to make some money, which is good. Everyone should make some money, right? Now we do use hedges here. We use hedges all the time. So we're S&P puts and IWM puts or RUT calls and stuff like that. I mean RUT calls and puts, and we did that. And you have to use hedges so that days like today, despite your longs, you make a gazillion percent on those puts and make 400% on your money. So that's up to. I mean, I go ahead and mention that stuff all the time, recommend it. So it's up to you to be tactically neutral. In other words, long and short. But don't get like crazy short at levels where the markets are down 1,500 points from the top, and you're basically you know or 2,000 points from the top, to be honest with you, and you're like, yeah, this is the time I'm just really going to go short. So that's stupidity. Doesn't mean you can do tactical shorts. All right, so let me get straight to this. If this pattern symmetry, I'm going to clear this out for everyone, gets clean chart here. So you get this pattern symmetry, and we come down here this morning, right? So you have a massive reversal hammer here. Let's say we get a little slippage, or we get, let's assume that we're going to get this type of move here. So what's the next technical move? The next technical move is that this rising wedge. Now you can see here, this is a multi-year rising wedge. Taught this to people a lot of times. This is a very large multi-year rising wedge. What do rising wedges do? They break down, they pull back. Normally they try to find some support at the lower end of the thing, and of course that support got broken big time, and that was a support on Friday right there. okay, and on the uptrend line or the lower arm of the rising wedge, and then it just broke apart over the weekend. China's down 8%, obviously, it flies over into Europe, so you name it. So right now we're full-fledged, full-blown pullback. So at this point, is slippage would basically mean that you have to look for other points here. So it could be down here, it could be down below 15,000 for all I know. And of course, you have a massive breakout line here, and this is something I want people to concentrate on. We talked about it in the sessions. This is a massive multi-year breakout, okay, that I would say a good, a majority of traders and stuff were not there. I'll tell you that for a fact. And that was in October of 2012, right there. Okay, October of 2012. So was it October 2012? I guess it was the end of 2012. Okay, and so the bottom line is that let me see actually where exactly it was. Let me get the this was the oh, my apologies. It was actually March. It was March 8th, 2013. So it was exactly 4 years from this point. Isn't it amazing how this works, right? This was March 9th. This is actually March 9th right here. So 4 years later, 2013, you get the monster cup breakout on this move here. So at this point, if you want to look at it this way, I expected this to really happen I mean, I expected these type of corrections like down here to happen in October, but I guess, hey, who cares about dates? The algos don't care about dates. So it's happening now. So at this point, if you look at a sine wave, if you want to look at it this way, then it is logical to assume that we are at one point, probably this year, given that what we're going through, maybe in October, we are basically, and this sell-off is not over. Let me just be very clear about that. So we're going to come and test this massive multi-year, 4-year, okay, 4-year cup and handle. I mean, not 4-year, it's actually from 2007. So, 6-year breakout level, right here. So if it comes in holds 14,000, so the real optimal scenario would be that we stay short, which is nirvana, right? And stay short all the way to 14,000, and then you basically cover your shorts and make a zillion. You make a zillion bucks here, and you make another zillion bucks there. It's never that easy, right? So we have massive support level exactly where we are on the October 14th lows. We possibly get a bounce up towards this uptrend line. Given what's going on out there, I can't really forecast global macroeconomic stuff. I mean, come on, I'm not running a central bank, and neither do I, sit there in the middle of the algo Netherland, or Netherworld, right? Like Michael Jackson's, what is it, Neverworld, Neverland. So I'm just, guesstimating from what might happen. So this level will at one point get tested. Not sure if it's going to happen this year or not, but the speed is, 1,000 point drops. People are getting kind of immune to it. Just behavioral game theory. The more, you go experience something, you kind of build the immune system. So 14,000 would be fantastic. Great. In the meantime, this is the level to watch. Slippage is mandatory. It'll happen. So 15,000, who knows? Could very well happen this year. I mean, this week. Saying all that, I'm going to be doing some very powerful tactical trades. People who are going to be stuck to their screens, active, we're going to make a lot of money, in my opinion, long and short. The bounces are going to be powerful. The sell-offs are going to be powerful, and I can assure you, last week was one of my best weeks, and honestly, you know what? You got to be tactical. There's nothing to it. Don't sit around. Hopium is not the play here. Neither is dopium, which is dogmatic, bearish mentality. Got to be tactical. The world is not ending. There's a massive opportunity, buying opportunity in many, many different stocks. Right now, it's the baby with the bathwater. Forget the baby. They're throwing the mother, father, grandfather out there, and this is the washout. These are the nice washouts. So don't look for like massive turns and we're going to go back to the highs. None of that crap's going to happen. All right, straight out. We're just going to be tactically playing it. So right here, little slippage on the Dow. And I'm sticking to the down. I want people to look at the bigger picture. All right. I'm going to be active all day long. And you know what? It's going to be a great day. God bless America. And you're witnessing history. Learn from it. This is the time that market history is unfolding in front of you in minutes, hours, and days. Don't waste this time. This is what makes great traders. Thank you for listening.